Welcome back to Tape Reading Concepts. This is Nikolai, and in this video I will explain the rationale for a few trades that I took early this week. This is crude oil, 377 tick chart, and we're gonna start here at the Sunday night open. There was a slightly bearish bias here until the early morning on Monday. This is what I consider the US portion of the session, and this is the time that I come to the table, right around 7 a.m. Eastern time. Price was balanced here, just around $74 per barrel, and then a slight bearish bias developed as the US pre-market was shaping up here. There was a marked acceleration with the opening bell at 9:30, and we got a massive extension here all the way down to $73 pretty much, 73.80 to 73. One extension, one straight line move, so a significant bearish implication with this early morning development. On the way up, pendulum pullback, relatively the same size as what we were experiencing previously in the pre-market. These are just about $450 pullbacks, or 40 to 45 ticks here on the board. And similar to the pre-market, we did retest the bottom. You can see that this is slightly lower than this pivot, the same way that this here was slightly lower than this pivot. And then price rotates back to the upside and goes back to challenge the high, very similar to last time, this time more on a horizontal basis. Again, balanced, roughly two equal lows, a few equal highs here. So stair-stepping movement to the downside within this range extension template. Point of ignition being up around 73.80 with the opening bell here. This is 9:30 here in primetime US. We're already far down the curve for me to be interested, although I'm no stranger to continuation trades. I really didn't see this price action as that much viable, though there is an opportunity here right after, it seems right around 11:15, as the base holds. There are potentially an entry point or two. I did keep tabs on the context though. You can see that we did step lower and formed another base here right around the lunch hour, which was just about 25 ticks lower. And then as the session progressed, we broke the early morning bottom here, or the first bottom in the regular session that was formed around 10 o'clock. We had another extension to the downside, and then further down. So I did form here a sloped floor from the initial couple of pivots after the descent from the point of ignition. I reflected this same frequency through the top here within this secondary base, and within the stair-stepping movement down towards the end of the session. You can see here 2:30, and then this is the end of the Monday session. Fairly bearish close, very close to the bottoms, right around 72.70. And we have made significant progress on the way down already here, starting just about $2 per barrel higher, around 74.60. Now, looking at this here in the beginning of the post-market, or in the beginning of the Tuesday session, I noticed that the regular stair-stepping movement to the downside formed by these bases tends to repeat here. You can see that the initial high in the Tuesday session holds, and then we stretch to the downside. We get a poke of the bottom, so no significant follow-through right away, but then another lower high, another excursion down to the sloped floor. What made an impression on me is that this market is not only very consistent, but it has started to fall somewhat short of its projection here, and that suggests that as the sellers are getting a little eager with moving the offer lower and lower, it is likely that price doesn't accelerate to the downside to make a significantly low low. Many of these late sellers might actually get caught on the wrong side of the market. And this is in fact where I see the opportunity. Instead of looking to hold the bottom in a market that is fairly consistent in its progression to the downside, I'm interested in seeing some of the late complacent sellers in this progression get put under pressure and hopefully bail out of their positions, but I'm still relying on the overall integrity of this progression to ultimately give me follow through to the downside. So the area of interest is right here. If these prices are reached, then it is reasonable to assume that most of these positions here established pretty much after 2:30, they would definitely be out of the market. In other words, they would be, if these prices here print, then we would see price levels at which all these positions will be underwater, and therefore most of them will probably have already been closed, yet we would still be maintaining the integrity of this downsloping reference point and, for that matter, the previous level of support. So this is my zone of interest. Now, I did stay very late here to see how price will develop to the downside, because if this progression down here, which is bending somewhat parabolically, accelerates, then there's no telling where price could stop. If this bottom breaks here, then I really don't know. We could go significantly lower. The floor, the sloped floor holds, and by about 130, 145, we already have a significant reaction. Very similar to what we had previously as we're breaking a horizontal base, right? We have a strong recovery. So it seems that my idea is already in motion. I'm already behind this parabolic curve in this space here. It's almost like we're not connecting by this same context anymore. So sellers are not stepping over each other to sell anymore. Instead, the profit taking at this reference point is overwhelming the leftover selling and is going to send us higher. All I have to do is, place the idea. At this point, it's already fairly late. It's in the AM. So if I want this opportunity, I'm going to have to estimate my placement and my projection for a target. What I did here is a plan on my staple $200 per contract stop, which is the volatility adjusted, or it's going to allow me to accommodate a certain amount of noise inherent in this level of volatility and still keep me safe behind what I perceive as safe structure. And in this case, entering anywhere here in the 73 area would allow me to have about half of my stop well above the previous base, yet I would be gaining placement at prices that are above all these positions established here after 2:30 in the afternoon. 60-tick target would allow me to capture a 3-to-1 reward versus risk, and it would keep me safe behind structure. It would also give me a logical technical target down this slope on what would be a marginally lower low, very similar to the relationship that I've been getting between this one and this one, and also previously seen here. Slightly lower price, projecting really the pattern repetition within a market that is consistent within its directional progression. The placement prices were offered as we peaked above this base. Beautiful two-wave pullback here, and it seems like I am taking some heat here while I'm asleep during the prime time of the European session, but ultimately, as expected, the horizontal levels are broken, but the offer really here catches at the slope, and we start projecting to the downside for what is a fairly straightforward move back down to the slope floor. Of course, with a hands-off management here, I'm asleep, but targets and orders are in place, and I'm getting filled pretty much exactly where I would have hoped for. We see lower prices in the European session, with the bottom found just below 72 per contract. Sharp turnaround. It's self-evident that the behavior is no longer the same we observed within the better part of the regular session on Monday. This steep dip here resembles the one that we saw right with the opening bell, and now with the sharp pivot, I observed that not only we're no longer respecting the slope floor, but it seems like we're oscillating symmetrically around it. This does project bearishly to potentially lower prices below 72 per barrel, and that's why here, as I come to the table around 6:30 maybe, I'm looking to pick up a short for the expected follow through to the downside, looking to ride that momentum and that potential acceleration into lower prices. We got a great candidate for a pivot here, lower high to the overnight one, and just about the same step here. You can see that the distance here is about 15, maybe closer to 20 ticks. This is the size of the stair-stepping movement that will be getting lower. So I expect that since the pivot is forming here, there might be a follow through here, same type of steep frequency, looking to pass it from this slope to potentially this slope, or maybe even lower. It's likely that whatever distance we had in this channel is likely, if price steps significantly lower, get picked up to the downside. So another sloping line like this, if you draw it down through this point, you will see that it projects into prices way below 72 per contract. 72 bucks per barrel. This opportunity initially leaned to the downside, but buyers were found here 72.30, which was just about $100 higher than the initial shoulder that we observed here with the sharp turnaround. So $100 on the step here, and I got stopped out in short order here very quickly. Potential change in behavior is observed with this turnaround. This is when I decided to frame the entire movement to the downside, the Monday session plus Tuesday here in the European session, as a potential counter-directional move to the general bullish progression within which has been in quite a while. It's in a very resilient bull market. We're already in the mid 70s here, low to mid 70s for price per barrel. At this point, I no longer expect to find sellers down the slope, since it seems that the phase of the market has changed, and the latest few pivots suggest that we have potentially observed here the turning point within the European session and are now climbing back for a corrective move. I'm eyeing here the overnight highs as a reference point, and as price climbs very steeply there, just next to no selling happens here. We are climbing here steeper and steeper. At this point, I'm asking myself, well, where is this market going? And I have two reference points. The first one is this green middle here, again created by finding the extremes here and here, picking up the low from the intraday on Friday, and that's the gentle slope and the middle that price is projecting. We're already fairly stretched here. It seems that a corrective move is due, maybe to the backside of the overnight high, but hopefully even lower here to where the pivots actually belonged, along the downsloping reference point. So I'm looking to potentially nibble on an overextended price here, nibble on the short side, and pick up a short expecting that corrective move. Now, trying to pick up a top in a market that is so strong is definitely a dangerous affair. I am taking only a partial position and looking to potentially scale in if price moves to the next barrier. This is the backside of the same directional projection that I have from previously, from midweek, the previous week, from the uptrend, and I do often leave these lines to see if price works with them. An interesting amount of confluence is shaping on the chart as well. You see that this base here, this horizontal base, which established right after the vertical dip here, this is the first horizontal base within this stair-stepping movement to the downside, and it seems that this horizontal base is meeting my first upsloper right where price is due just now. And of course, a little bit high, you can see where the actual point of ignition, where price accelerated with the opening bell, is meeting the other, in this case here, light purple or violet reference point. So I have two potential points of interest where I expect some resting sell limit orders to absorb the reckless buying at prices very far from the bottom, with the bottoms here right around 72. Here we're trading 1,400 dollars per contract higher, with only one granular pullback here. This movement here just short of $500 it seems. I do expect a corrective move, and you can see here as the buyers are getting tired, we did get a bit of a parabolic lean here on the way up, price momentarily leaning in thin air. A weak bar. I did pick up the first half of the position. This was right after 9 o'clock, and then no immediate reaction to the downside. We stepped yet higher, another parabolic bend here in the bars, another vertical, and I picked up the second half of the position. Difficulty with trading both against trading short against upsloping lines is that over time the risk reward situation deteriorates. It's not in your favor. Furthermore, when price is climbing that steeply, there's a situation in which possibly none of the reference points to the left, especially horizontal levels, matter anymore, because we're in a different phase of the market, the behavior is different, and these levels are not regarded as meaningful resistance. Still, we have to limit the risk. I did decide to leave the risk just above 74 per contract. Looking at where the lows are, I assume that getting all the way up here to $2 per barrel higher within a matter of a few hours with nothing but one granular $500 pullback, I decided that's a little bit unlikely. Of course, my combined risk here is significant. The average fill price is right here, right underneath 73.60. You can see the distance between this one and this one is about the same, and on 74, just above 74, we're looking at 4 full boxes and change. So this is an $800 plus risk for this opportunity. What is the reward? Well, I'm looking for a measured move to the downside. At the very least, I expect that the overnight highs will be tapped, which leaves me with not a very favorable risk versus reward. But having in mind that we're climbing here on pretty much one breath of air, I do expect that potentially a 50% pullback is possible, or maybe even a little lower down this reference point. So initially the risk versus reward situation doesn't seem very meaningful, but any amount of pullback here will build up some structure which I can use as a reference point to see whether price is actually looking to correct back to the middle, or is going to maintain its aggressive buying posture, which would probably look like some sequence of higher lows. If I observe something like that, I can always take a graceful and minimize the risk and just jump out on a small pullback. This, however, was not the case. It seems like the second entry was very well premeditated here and was the actual top of this wave. We did get a measured correction here, again, $400 to $500 in this pullback, somewhat similar to this one. Nevertheless, we held a slightly higher low, so this is my reference point right now. If we make another drive up, make a significantly higher high, or stack another higher low, then I might be looking to potentially reconsider the amount of risk I'm holding here. We did rally again to the top. I'm intently looking at here both the point of ignition and this potential area of interest, and indeed no significantly higher high. We got a bit of a poke here on the high, but no follow through, weak bars, and another correction here. This one happened to be a little bit more significant than the previous one, and that was somewhat encouraging. If you look here at the overall move, it seems that price is potentially rounding over, maybe getting tired, so a measured move to the downside was expected. And you can see that with an average entry price right here, I'm already looking at a little bit of green here on the screen. Of course, the situation could change rapidly, but we're no longer climbing steeply, and it seems that we're not really making that much progress up anymore. So if price is indeed tired, as I suspected, then the corrective move is probably already transpired. The remainder of the morning session, the volatility subsides. A quick check at the clock here will tell you that the bottoms were found right around 5 o'clock and the tops were found right after 9:30 or before 10 o'clock. As the volatility starts to subside here, there's useful information to conclude that the phase of this market has changed yet again. It's kind of hard to maintain irrational slopes or very high relative prices at a very low rhythm of participation. That only reinforced the idea that the correction will continue here inside the already established session range. what we had here before the lunch hour is a couple weak attempts to rally above 73.50. Didn't happen, and a second corrective wave of roughly the same size here, just about $600 or 60 ticks to get us down to the expected target, exactly in the middle of the controlling swing. You can see the bottom, the top right here, and the 50% pullback. Measured move. This is what I went for. This is where the target remains. We did see slightly lower prices here. It seems right around 72.70, but then within the end of the session here, price rallied very steeply. Notice that this is the same behavior through the same prices that we saw earlier here in the session. The difference now is that instead of starting all the way down here around 72, this rally is starting at 72.70, so a $700+ step suggests that, well, this high is indeed in trouble here within the Wednesday session. Very likely that we're heading back here towards the Sunday or Monday morning highs, and potentially even higher. Oil is in a very resilient bull trend. Overall for the session, 2 out of 3 trades, a well-measured cheap shot, hands-off management overnight, and then attempting to ride further follow through to the downside, risking one of the 3 stops accumulated. Support was found on a higher low, and very quick stop out here. And then looking to catch a mean reverting move off of what was definitely an overextended market here, scaling in cautiously because of the less than favorable risk versus reward perspective. I'm inevitably facing trying to call the top in a steep climb, but ultimately the market did cooperate and offer the mean reverting move here towards the middle for well, combined risk was north of $800 for this position, and the combined profit here is 140 ticks or 1400, so less than 2 to 1. Not very favorable, but nevertheless altogether for the session looking at 180 ticks of profit, combined with the no participation Monday here. Still a good start of the week in trading crude here. This is Tape Reading Concepts. My name is Nikolai. Like, share, subscribe to the channel if you like the content. Let me know if you have any questions in the comment section below. I'll catch you guys in the next one.